You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, how are you? My name is Jonathan Rose and welcome to Masters in Trading Live. At Masters in Trading Live, just organize a little bit, I get on here every day the market's open. We always get on at 11 o'clock Eastern time. I get on here to share some tidbits about the market, to try to add value in any way that I possibly can, and once in a while, we'll even share our trade of the day. Actually, today is that once in a while. We're going to share our trade of the day. We have an earnings trade today. Earnings season comes around 4 times a year. It's like clockwork. For a name like Apple or Microsoft, they've been around since the 70s, right? 4 times a year. Every single year for the last 30 years, these companies release earnings. So the analysts get a pretty good feel on what the expectations are for earnings for these mammoth companies like Apple, Microsoft, Amazon. We are walking into earnings season right now. Now, we take a little bit different approach when it comes to earnings season because Apple, Microsoft, Amazon has been releasing earnings for 30 years, 4 times a year. The street's got a pretty good feeling of how to value those stocks. We want to look for stocks off the beaten path a little bit where analysts might not have the best valuation. So we might be looking for a company that's only released earnings 8 times, maybe an IPO 2 years ago, and the options market makers and the analysts aren't as good at valuing those stocks. That's where we have an edge. So I'm going to show you today how we find earnings trades, and I'll show you an example of a darn good earnings trade, at least in my opinion. Got a bunch to cover. We're going to go over the Qs. We're going to talk about a major divergence, historically big divergence, and then we'll get into the earnings trade. Looking forward to this one, guys. I'll see you guys at the screen. I want to start here. This is the QQQ, and we've been talking about the Qs for the week. The line in the sand resistance that we're looking at, 493.70. The high of yesterday, 493.70. Now, I want to give a moment to give a shout out to the Discord room, because the Discord room yesterday, when the NASDAQ got to these key levels, they were also looking at the VIX. And that's what we need to do, because the VIX 9D is going to give us confirmation on the sell-off, on this being resistance. The VIX 9D has continued to sell off. In order for this to play as resistance, we need the VIX 9D to tick up. If it doesn't, this market's going to stay strong. Something that's really just interesting to me, take a step back. QQQ on a monthly, going back 25 years. What a time to be alive. Look at just that tremendous growth. What I also think is really cool is we had COVID, right? COVID, tons of money goes into the system, so we have artificial rallies. Qs get pulled back because whatever, it's just a ton of additional quantitative easing money coming through the system. But what's kind of cool, if you look at the market, it kind of comes right back. Like, forget COVID. Like, even without COVID, the market probably just messes around in here until it finally gets to where it was. So kind of cool seeing, you see the artificial component. Market's been super strong, but overall, man, what a time to be alive. Let's look at oil, and let's do the same study in oil. Because if we look at a monthly in oil, and I want to do this just for perspective, max available, I got you on a monthly. And so here's what oil looks like. Now, to me, what does this tell us? Well, for one, oil is volatile, right? Coming in, and this is all fine, but then we start to get super, super volatile. I'm a huge believer that indices don't stay around big numbers very long. And so when oil comes and hits its 200 period moving average, those are just so widely followed on the street. So here we've been kind of messing around with this 200 period moving average for the last 4 years or so, but it's been providing really, really good support. I think you could comfortably use 64.70 as support and then a more immediate support at 73. So right now, especially going into the election, bullish oil with the first concern at 72.94, but then the real foundation of support at 64.77. I do like opening up markets and looking longer term. I just think it's really, really valuable for a trader or investor to get perspective. Let's go to the slide deck. What do we have here? Let me tell you. So going back 20 years, we're looking at the relationship here between gold and platinum. Gold and platinum. Now, each one of these is a cycle. So each one of these is a separate year. So after 1 year, to use this example here, gold is strong relative to platinum, but then the next year we start back at that 0 point. So this year again, starts out even, gold is strong relative to platinum. Every year. Why this is so interesting right now is gold relative to platinum is 94% of its high for 1 year. So the only time that it's traded above this level, it did a little bit in 2011. It did a little bit in 2008. Notice the next year, the next opening, sells off right away. Same thing here. Got up here, sells off right away. So what does that tell us? It's really important to take a step back and look at the big picture. And that's what we're doing right here. In the big picture, thinking gold is very expensive. It's very expensive relative to other metals, but it's specifically obnoxiously expensive relative to platinum. Just going to write plat. Okay? How can we take advantage of this? Well, one thing we can do is we can be bearish on gold. Fine. Gold's been super strong. It's had a pullback. Metals are super strong. Okay? I think it's better to go to what's not performing as well. When gold's having this significant breakout move, that's when we want to look to what is correlated to it. Now, platinum, the downside of platinum is that it doesn't have the flexibility to invest in like gold. Because gold, we can do gold miners, we can do gold bullion, we can do gold futures. There's hundreds of different ways to express an opinion about gold. With platinum, you're not going to have as many ways to express an opinion. It's not going to be as tradable. But also, what's super important, because it's not tradable, that's more edge for you. Your friends are looking at gold. Retail investors or novice investors aren't getting creative in their trading and looking for different ways to express an opinion. When gold's ripping higher, many are trying to jump on gold. I want you to switch the thinking around and look to play where others aren't playing. Platinum right now is very inexpensive relative to gold. So what you can do is you can look at all the different ways to express an opinion to get long platinum. That's what I've done here. And in doing that study, I've settled in on PSLV, Sprott Physical, silver, and platinum. Actually, PSLV is just going to be silver, right? And platinum is going to be this PPLT. So here we're just looking at Sprott Physical silver against platinum, platinum, down, down, down here, silver breaking out, gold expensive relative to silver, PPLT. The other way that you can express an opinion of being long platinum, we've talked about this one in the past, PLTM as well. So we have PLTM or PPLT. Why don't I do this, because that would make more sense. So here, I'm using Thinkorswim here. I could just use a comparison. I do this quite a bit. Those who watch Masters in Trading Live, you see me doing this. PPLM. That's what this is, right? PPLT, pardon me. Where are you? PPLT. There we go. PPLT. Okay. Come on. What's going on here? Give me a second, guys. PPLT. Okay. Really what I'm just trying to show to you and also to me that PPLT and PPLM PPLT and PLTM, okay, Jonathan, you did it, are basically the same thing. How can we tell they're the same thing? Look, blue and white, just right? They're exactly the same thing. So you can just go to PLTM, which is going to be a lot easier to transact. PLT, a little tongue-tied here. PLTM, 936 last trade. They don't have options, but this is really, really inexpensive. Okay, earnings. Here's a name, OSPN, OneSpan. We've talked about OneSpan, and I'm talking to Advance Notice. We've talked about this ticker before. This is a brand new trade. This has nothing to do with any trade that we've done in the past. OneSpan, ticker OSPN. On the bottom here, I've labeled their previous earnings. As a market maker, who's someone who's valued options, looking back on these last 2 years of data, you'll notice that OSPN has been in a range between $20 and $8. Traded 8, traded 20, it traded 8, it traded 17. This is a very, very volatile stock. This is not like your Apples or your Microsofts, because this is really not just moving 10 or 15%. This is moving 50%, 70%. The way that OSPN moves is on its earnings. OSPN makes really, really big moves on its earnings. So what we want to do is we want to find names that move a ton after their earnings, but the options aren't pricing in that relative movement. So Aspen, this is a name that waits for its earnings before it moves. So let's look at some data, because right here, I'm looking at the past earnings releases for OSPN. The next is going to be November 7th, 1, 2, 3, 4, 5, and its last 6 earnings releases. After its released earnings, this is how much it's moved. Hasn't moved here yet because it hasn't released earnings. But in its last 6 times, OSPN has moved an average of 25%. Sometimes up, sometimes down. But we know it moves an average of 25%. Not surprising, because when we looked at that chart, OSPN is very, very volatile, right? It's all over the place. Well, if OSPN moves an average of 25% after its earnings release, what are the options market pricing in right now? That's where we go to Aspen. We need to go into the November expiration. That's what I have here. November expiration. How much is the options market pricing OSPN to move? 242. 240. Stock's at 15. If it was 3, that would be a 20% of movement, but it's not. It's about 17%, right? 17% for 36 days. 17% for 36 days of movement. Well, how much is that 1 day of earnings valued at? What do you think? If we go back, we look at OSPN, how it's moved after earnings, it looks like every single time it moves over 20%. That one time, May 4th, 2023, it moved 17%, but plenty of times it's moved 30%, 29%. So if these options are only pricing in 17%, doesn't that seem wrong? Certainly does to me. Seems really wrong, and these options seem really, really, really cheap. Now, I want to pull up a live market because it almost seems too cheap, and I want to make sure that these prices are still existing. And they are. So right here, the trade that I like is buying the 15 straddle, buying the calls, buying the puts. And this is an earnings trade. This is a phenomenal, phenomenal earnings trade. So we want to buy the 15 straddle. 15 straddle, 215 at 245. You could put this in any of these programs. You could look at it as a straddle. If I put it back on a single, all it's doing is adding up the offers. So $1.40 plus $1.05 is $2.45. We want to do this trade for $2.40 or better, $2.45 or better, buying the 15 straddle, buying the calls, buying the puts. We have 36 days until this position expires. OSPN, and again, go back, watch the video. This is exactly how we trade earnings, and it's rinse and repeat every single earnings cycle. I also wanted to share the expected move for OSPN. Maybe some of you guys want to get creative in your own trading. The downside of the expected move is 1462. We should see some support at that level. And if that level doesn't hold, it's going to be extremely, extremely bearish. That was a lot of fun going through that process. The earnings trades, in my opinion, I want to say easy, but they're not easy. They're just the most defined trade. They're the one trade that says, you know what, it's black and white. Yes, this is a really good opportunity, or no, it's not a really good opportunity because the options are priced well. Hope it helps everybody in All Access. You guys don't go anywhere. We'll be right back.